spoke with commodity guru Jim Rogers, and let's see what he's been buying and what are his views on the commodity rally right now.
I know that what is supposed to happen is another one of those cases of what everybody knows doesn't happen. Yes, gold has often been an inflation hedge, but many times, as you know, I'm sure you watch ET now, many times gold has done badly no matter what's going on in the world. So, I mean, I wish life were so simple.
Okay, so that's the take coming in. I'm guessing that perhaps people must be buying more gold when it comes to the Valentine's Day gift as well. Jim?
Valentine's Day gift, Anisha, that's a new one for me. I've heard people buying roses on Valentine's Day. You actually
Let's
get gold.
up the game. I'm just
No, you got gold on Valentine's Day, Anisha. I'm just curious. That's the first one I've heard.
Hints that perhaps it's not a diamond, gold this time. Let's see what I really get. But Jim, if you had to buy something, what would that be?
Well, if I had to buy something, I'd buy silver. Silver is much cheaper than gold on a historic basis. But I did send my wife flowers today and my daughter's flowers. So I bought flowers and maybe some silver. Here's some silver in my pocket.
In your pocket, so you have it handy, and that's a sweet gesture, Jim. But clearly not seeing any love. I know you were talking about all that pessimism, and perhaps back home as well, we're discussing a lot of factors like inflation, maybe not recession back home. But what is it that you're expecting is going to be the next big trigger in terms of what is going to be that asset class really that is likely to outperform down the line? What do you believe one should do when it comes to diversification in their portfolio?
Well, I would say probably Japan, probably China right now, because both of those markets are still down from their historic highs. Maybe India. I mean, India's been a strong market for years, as you know. Somebody's done a very good job in India, but I would suspect Japan or China would be a better place to diversify.
Diversification is the name of the game. But Jim, what about the dollar? Of course, from that 115 level, we had seen the dollar index reverse quite a bit, but it's been quite sticky around that 103 zone. Do you see a bit of a correction here, or is it likely to head higher?
Well, first of all, no, diversification is not something I am keen on. Diversification is something that brokers thought up so that they don't get sued. If you want to be successful, you don't diversify. You focus, you focus, you focus. You have to be right. If you're wrong, you're going to go broke. But if you want to be rich, you have to focus narrowly in the right things. So please, I know everybody talks about diversification, but I'm not going to talk about diversification. As far as the dollar, I own US dollars. I expect the dollars to go higher before this is over, because when we have turmoil again, everybody's going to look for a safe haven. And they think the US dollar is a safe haven. It's not, but everybody thinks it is. So I own a lot of US dollars still.
Jim, now whether it is recession or peak of inflation, some would argue that interest rates globally are nearing its peak, at least in the interim. Is it a good time to park cash back to bonds?
Well, cash, it depends on which cash. First of all, if you own the wrong currency, you're going to get ruined. I am not buying bonds. I expect interest rates to go higher over the next few years. I mean, you don't remember, but in 1980, when we had the last inflation, interest rates on short-term treasury bills in the United States were 21%. That's not a typo. Short-term treasury bills were at 21%. It's going to take a lot to kill inflation this time because inflation is worse now. Not this month, not this week, but before this is over, interest rates will go much, much higher.
Jim, the joker in the pack is that Ukraine and Russia are still at a war. Now, there are two assumptions here. If they continue to remain at war, what impact it will have on inflation and commodities? And in next 6 months, if there is a ceasefire, how will that impact commodity prices and underlying demand?
Very good point. I don't know why this war keeps going. I don't know who's getting anything out of it, neither Russia nor America nor Ukraine. But if it ends or if there's a ceasefire, everything is going to react. Stocks are going to go up a lot. Bonds will go up a lot. And oil will go down. Grain will go down. But if I were, what I plan to do, if that happens, is to buy grain and to buy commodities, because that will be a buying opportunity.